Hi everyone, welcome to this episode of Money Moves. First, I will go over a little bit of a follow-up to my previous video about the rise of GameStop and Wall Street bets, and that is that Robinhood is getting sued by those users for what seems to be a textbook definition of market manipulation. Then I will talk about Jerome Powell's comments this last week. Then I will go over each of my investing accounts, starting with worthy bonds. Then I will go over GroundFloor, followed by Fundrise. Then I will go over my retirement account, followed by my M1 Retire accounts, and then I will finish up my investments with my options portfolio. Then I will go over my bi-weekly tracker, and then of course there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning this 2017 Dodge Viper ACR Extreme, or if you're just getting started on your financial journey, definitely like and subscribe. It has an 8.4 liter V10 and only 31 of these were made. They currently sell for around $200,000. Welcome to the Portfolio Bulletin. Let's get started. So if you're following along with the GameStop and Wall Street bets saga that I talked about in my last video, linked above, you would know that Robinhood traders are pretty upset with the platform's handling of the situation, and they are already trying to sue them. Robinhood decided to restrict trading on volatile stocks, including GameStop, which sparked a wave of fury from retail traders. Personally, I think they have a pretty good argument here, since the attempt to manipulate stock price by not allowing traders to buy the stock and only allowing them to sell it seems like textbook manipulation and would be illegal. But of course, Robinhood did have some legal protection in their arbitration clause, which is the same kind of agreement you have for credit card users or cell phones. Essentially, this arbitration agreement protects them from any legal action, but I'm not sure how it will protect them from direct market manipulation the way that it was done here. They say they can sidestep this arbitration by using a class action lawsuit, but class action lawsuits are incredibly difficult to take against companies, and Robinhood since then has lifted their limitations on purchasing the stock, and now will allow you to buy GameStop shares as well as AMC. The current class action lawsuit states that Robinhood completely blocked retail traders from investing in GameStop for no legitimate reason other than depriving retail investors from benefiting from Robinhood's services. Even senators like Elizabeth Warren said that the SEC should step in and protect retail traders from this kind of action, and it should be interesting to see where this goes in the future. If you're curious about the class action lawsuit, there is an app that you can use to join it. And scrolling down here, you can see it's called donotpay.com, where you can automatically join a class action lawsuit against the platform Robinhood. Moving on here to JPOW's comments on interest rates and inflation. The Fed said on Wednesday they will keep rates at near zero and double down on its commitment to buying massive quantities of bonds each month. Basically, this is making sure that companies can service their debts and maintain enough cash on hand through the issuance of bonds. There was a little bit of speculation that the Fed was going to taper its bond purchasing, but JPOW came out and squashed any rumors that were similar to this by saying they were going to continue to buy as much as they could and continue to keep interest rates low for the foreseeable future. He wants to make sure that the tapering is not premature and shocks the recovery in an unnecessary way. JPOW then stated he expects to see transient inflation in the months to come and that he expects it to continue, meaning that he expects it to go up and that the Fed would allow inflation to rise above 2% for some time. Overall, JPOW is not going to rock the boat, as he wants the economy to stay basically where it's at and continue to recover. Moving on to my investments, starting with worthy bonds. You can see I continue to withdraw this money every single month, and in fact, I think I'm going to draw this down over time. Start moving some of this money over either into my trading accounts or into GroundFloor. Either way, I think this is a little bit too much money to have in a lower yielding asset class. I maintain it because it is fully liquid and I can use it in an emergency, but I think I have enough money that's available for that. This is still a great alternative to, say, a high yield savings account at 5%. But in terms of my overall portfolio, I think it's time to start drawing this down and moving it into a little bit more risky investments with higher potential for returns. If you are interested in worthy bonds, which is a 5% yielding bond that is asset backed, there is a link in the description that will get you one free bond when you fund your account. Speaking of GroundFloor, I have been increasing this position pretty dramatically. It's now up to almost $1,600 across 49 loans with an expected rate of return of 9.7%. Across this money, I'm expected to receive $128 in earnings. And this is not quite that 10% that I showed above because these terms vary anywhere between 6 to 12 months. And of course, I'm just going to keep reinvesting this money as I go. I'm also draining money out of Lending Club, which has ended its retail platform, and moving it over to this platform as the loans populate. And they've been populating around 9 to 12 loans every week or every other week. So I've been putting $30 into each one of those loans. And you can see my investments here. I have a little bit over 5% in A notes, 19% in B notes, 23.5% in D notes, and a little over half of my total portfolio is focused in C note loans, with a blended rate right around that 10%. As I mentioned in my last video, I'm still not being picky with these notes as I want to build up an overall portfolio. So every single note that becomes available is getting $30 invested, and that will build a diverse portfolio, protect against any defaults. Despite the fact that this company can take over a property, I still want to be diversified. Again, if you like this platform, there is a link in the description. Moving on to Fundrise, I did break through that $29,000 barrier, and I will break through the $30,000 barrier here in first quarter. I also will see that $2,000 total net returns come in this next month also. Definitely building this portfolio up, and I want real estate to be around 30% of my overall investments. If you include GroundFloor in that, which I'm still deciding how I'm going to categorize that on my overall portfolio, but between the two, I'm definitely getting closer and closer to that 30% invested in real estate. They did release their end of year letter for 2020, and if you want a full review of that, check out the video linked above, where I do a full roll-up of their returns and where they see themselves going forward. Currently, they want me to invest $825 every month to get to that $500,000 by 2040. But at my current growth rate, they say I should make that by 2040 at my midpoint. And I think this value is supposed to get my low point to that 500,000 just to make sure that I get there no matter how my returns do. But I'm just going to stay on track with my current investments of $550 every single month and keep this midpoint right around 500,000. Moving on to my retirement account, I did tweak the allocation here, and the majority of my money is now going into the S fund, which it says is small cap stocks. But in reality, this is a total stock market fund, so it does include a lot of small caps, but also some larger caps. And I think there's a little bit more room to grow here in small caps versus the C fund, which is the S&P 500. The S&P 500 is a little bit too heavy weighted towards those mega cap companies in Amazon, Apple, and Microsoft, as well as Google. And I want to buy a little bit of those cheaper companies here in the S fund, so I've reallocated. And also, I've stopped allocating quite so much money to this as I do want to max out my Roth IRA. And all of that extra money that's not going here will go over to my Roth IRA with Tastyworks. Moving on to my retire account with M1, you can see we had a negative month for the first time in quite a while. Not super negative, a little bit under 1% here, but it was negative. Looking at the sectors here, you can see almost everything was down except for finance. Consumer was down the most at just over 3.3%, and utilities was also up this month. But it seems like we might have topped out a little bit. Looking at the quarter here, we're still up pretty significantly, 13%. So being down a little bit here in the last month isn't a huge deal. But it's worth mentioning that we are down actually for the first month in a while. Moving on to my higher yield savings account. Again, looking at the month, it's down a little bit more than my other account. Looking at the quarter here, it's still up just over 5%, but for the month it is down. And as you would expect, VIG is down a little bit. Short-term government bonds were up. Some of my bond portfolios were down. Realty income was down. The total value ETF was actually up, as well as the high yield dividend ETF. DIV, which has been a great performer, was down actually the least out of these funds, with long-term corporate debt being down 2.5% and Drogo being down just over 0.5%. Similarly, looking here at Robinhood, this is the first losing month that I've had in quite a while. Looking at the quarter, I'm still up over 20%, but we had a little dip here over the past week, which resulted in a losing month of just over 5.5%. Looking at my positions here, if you're interested in a detailed rundown of my positions, there is a link above to my overall options portfolio overview. But looking at the positions that have impacted this portfolio the most, DocuSign was down pretty heavily, as well as Chewy. Those ones are affecting this portfolio the most. And then I did have to roll out Nike as well. And if you're interested in keeping track of my GE position, I am rolling this for the duration of 2021 to see if I can make money wheeling this stock. And that video is linked above. Taking a look at my Tastyworks portfolio, you can see I got my Roth IRA here up to $3,000. I'm still maxing this out for the last fiscal year, which I can do all the way up until April 15th. And then my individual account value here at $32,000. It is down quite a bit over the course of the last month. And you can see I have some open losses here, which I haven't closed out yet. Most of these I'm pretty comfortable holding on to, as they're not in a very large loss, and I still have a while until my break even. My largest holding here is actually Fiverr, where I did receive a credit of just over $1,700 to buy the stock at $190. So I have a little bit of downside until it gets to that position over the next 47 days. Again, if you want a full review of this, I will link that video above. Finishing up here with my bi-weekly tracker, you can see it keeping up with the trend here. I was actually down overall from episode to episode in quite a while, at down just over 1/3%. Bonds were up as I continue to contribute to GroundFloor. Stocks were down because the market was down over the last 2 weeks. REITs are up as I continue to contribute to them. Lending Club is down as I keep withdrawing money. And then cash was down just as I continue to move that money over to investments. And you can see that represented on the graph here. Stocks going down. Trading was up, but that's only because I contributed money to it overall. As I'm including my Roth IRA here, since it is with Tastyworks. You can see bonds had been trending down for quite a while. It's starting to pick up a little bit because it's currently including GroundFloor, as I mentioned. And then Lending Club is going down. Definitely comment down below what you think of the whole GameStop and Robinhood situation, or if you have any thoughts on JPOW's comments about the future of the economy. Again, if you like any of these investments, there are links in the description that will get you free stuff if you fund accounts with them. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. So today's jelly is Fake Woke by Tom McDonald. And he is a hip hop artist who comments on social trends, and it gets a little political at some times. So I'm not actually going to play this video for you, but if you do like hip hop music with a little bit more meaning and not just talking about alcohol and money, definitely check him out and leave a comment on what you think. Personally, I think he's a great rapper. Again, if you got any value out of it, definitely like and subscribe if you got any value out of this video, and have a great day.